Happy Friday, everyone. Just want to go over what refinance is really quick. Everybody's talking about mortgage rates are the lowest they've ever been. You need to refinance, blah, 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 blah. So here's a couple, three things of what refinance really is and how it can benefit you or not benefit you. So when you refinance your mortgage, basically, let's just say you have a house, you have a $400,000 loan on it at 5%. When you refinance that mortgage, you refinance the existing balance, whatever balance you have. If you currently owe $400,000, the new loan amount will be for whatever you owe at the new current market rate. So if the rate right now is just throwing a number out there. If the rate is 3.5% for your particular type of loan, your particular situation, then you'll be refinancing it, lowering your rate for that existing $400,000 from 5%, which you had it originally, to the current market rate, maybe 3.5% or whatever it is. So you'll be paying about 1.5% less in interest monthly, because that's how the interest rate is calculated. It's calculated monthly based off your existing balance. Especially if you have, let's just say, 28 years left on your loan, you're going to be paying 1.5 points less for the remainder of your loan on that balance, right? So ultimately, you're going to be saving a lot of money, and that's what basically a refinance is. Now, if you did a 30-year loan initially, and now you have 27 years left, you have two options. Well, you have more than two options. You have several options. You can go back to a 30-year, which would help you keep your payment lower, or you can keep the same amount of years. So if you have 27 years left on your loan, you could leave it at 27 and continue on so you don't lose any years. Or if your payment goes down enough and you want to lower the term to, let's just say, 20 years and pay it off faster, then you could do that as well. You're not fit. You don't have to go back to 30. You don't have to stay at the current time frame that you're at. You can lower it, or you can go back to 30, just depending on the mortgage payment that you want monthly and the flexibility that you want to have. So that's pretty much how refinancing can benefit you. One last thing that you can do in a refinance, if you have the equity, you can take cash out during the refinance. So if your balance is $350 and you want to refinance and take $20,000 out to do some home repairs, you can do that while at the same time lowering your interest rate through a cash out refinance. So those are a few different ways of how refinance can benefit you and give you a little bit more insight of what a refinance actually is. There's two types: rate and term refinance, cash out refinance. Have a good weekend, everybody.